Yeah, good morning, everyone. Hello, good morning. I want to believe you can hear me. So let me welcome us to another exciting morning market review, MMRO. My name is Emmanuel Udogu. I'm reaching you for the beautiful city of Port Harcourt. I hope we are all doing fine and doing well today. I think we're going to start just immediately. For the newbies here, this is the session we normally have every morning, trading days, I mean Monday to Friday. So we try to look at the market, what the market is doing, do some analysis for you. We'll give you previews, reviews, tips, and tricks on how to navigate the market profitably. And I'm sure you can make some money for yourself. So we also teach you how to analyze the market by yourself. Remember, uh, teaching a man how to fish is always better. So guys, I want to believe you can hear me so I can start right now, even though we're expecting more persons to join us. Let me do some sound check here. Can you hear me? Go get to the chat room and indicate if you can hear me. Just do I can hear you. Okay, I can see you there, Emmanuel. Okay, that's my namesake over there. Okay, that's cool. So I would like to give like 5 minutes before more person join. But before then, let's just discuss generally how the market has been like for you, right? So most persons get into trading with the mindset of I'm just going to start picking money on the floor. Now you have to learn first before you start picking money on the floor. Remember, you have to learn before you can earn. Most persons bypass that word learn. No, the difference is actually L, right? Right? So most persons keep the learning and you want to jump into earning. And afterwards, that L that is keep will come back to haunt them in the form of what? Who can guess? So it will come to haunt them in the form of losses because they did not learn very well. So learning is the key. In fact, I normally say learning is the beginning of profit. Learning is also the beginning of prosperity. Good learning, man. So we are trying to get more places into the room. I think the number right now, let me see. Okay, not bad. So just like we always do, once again, good morning, everybody. This is Rally Trade Morning Market Review. One solid, exciting 1 hour of market analysis that promises to be very exciting, very profitable, directional, that can point you in the right direction of the market. My name is Emmanuel Udogu. So I want to believe we're all doing fine and doing well today. So let's just jump into fundamental analysis first. So the website we normally use, we can use investing.com. You can use investing.com. You can equally use myfacebook.com. You can equally use tradingeconomics.com. There are several websites, right? You can even use Bloomberg, you can use CNN, you can use all of those, but one of them that stand out for traders, especially new traders, are Forex or is forexfactory.com. So quickly, you can see my screen right now, no doubt. This is forexfactory.com. www on your browser, type for those of us joining us for the first time, because we always have new traders joining us for the first time, right? Remember, this is an industry that is fast growing very fast. Everybody wants to trade, man. Everybody wants to make money, especially now that they have removed subsidy across almost everything. You just have to trade and make money. All right. So this is forexmarket.com, and this is today is Tuesday. So this is the news we have for Tuesday, right? So the fundamental analysis are actually the major drive or the major thing that move the market, right? So you don't want to ignore your fundamentals. So for today, This is the date of the news, time of the news. I hope you guys can still hear me, but I'm not talking to myself. This is the date of the news, time of the day the news will be released. Currency the news will affect, right? Remember, currency, not currency pair. Okay, currency, not currency pair. Now, impact of the news. Okay, the yellow is low impact, the red is high impact, right? The brown is medium impact. Excuse me. Then of course, that's it. Then for today, we have a lot of red news, as you can see, right? They are high impact news. So 8:15, we'll be expecting the high impact news on the euro, right? So how do we trade it very fast? So there's already a countdown time over here. Excuse me. There's already a countdown time over here, as you can see. It's actually counting down for us. So this is a news concerning their manufacturing, what the manufacturing and of course service industry is doing. So this is news across Europe, right? So we also have the one from the UK, right? So today is actually a World PMI Day, Purchasing Managers Index. So it is a news that try to look at what their manufacturing industry, the service industry is doing, whether they are expanding or they are contracting, the relative business condition, all of that stuff. So actually, if the value, the actual comes out to be 50 or even above the forecast, then it's going to be good for the currency. So it can equally be good for the euro, right? So that means something like Euro USD, we want to do a short buy, right? Very fast buy. Now, something like GBP USD, you guys can see here, right? Something like GBP USD is the same thing. So, okay, so the one for Euro USD is actually 8:15. All right, so it is not going to be as drastic or with a lot of momentum as CPI and of course as NFP, but it's actually going to move, right? Depending on the market sentiment around it anyway. So we have the one coming from France by 8:15. Then by 8:30, we have the one coming from Germany, as you can see. Then by 9:30 today, we have the one coming from the UK. They are equally the PMIs. Then also by 2:45 p.m., we have the one from the US, right? So most of us would actually be looking forward to this one from the US, okay? So it's actually a World PMI Day because it's going to cut across these three major currencies, right? So very simple. If the value is 50 and above, then it's going to be good, right? So what you want to do is throughout today, there's going to be red news, right? So it means on your trade, you want to have a take profit and stop loss. Somebody was asking me, is it right to just only take profit and leave the stop loss? That is just thinking out of the box, right? But if you have traded very well, you know that the stop loss is used to protect your capital, right? So it's always good to have a stop loss and a take profit. All right, I think that's all for this particular day for the fundamental. Let me now share my chart and let's look at what we have on the chart. Okay, please let me share my chart. So this is my chart. So I've been able to share my charts. You can see my charts. Shebi, you can see my chart. Okay, somebody saying, but in most cases, after hitting your SL, it normally retraces. Yeah, of course, it does retrace. That is why you will need to have good capital so that your stop loss will not be a tight stop loss, right? If you have good capital, and most persons, what they do is they fund small amounts as their trading capital. Then perhaps if they not do it, they can't go and fund again. Why not just put all the money all at once? Then so that your stop loss will not be tight. Now I'm trying to answer your question that you said most times after hitting your stop loss, normally now moves in your direction. Yeah, it happens like that. Because possibly you do not put your stop loss in a good position. Remember, you now learning where to put your stop loss is actually a topic on its own, because on the chart there are areas of target, call it target liquidity. So if you put your stop loss where the market is targeting to grab some liquidity and take off, that means the market will actually move towards your stop loss most of the time, right? So of course, generally what we call it is areas of demand and supply. Okay. So let's start from USD index very fast. So the type of analysis I normally give is called market structure analysis, right? Market structure. So the type of analysis I normally give is market structure, okay? Okay, it's already 1 minute to the news. I tend to show you how you can create that news. I hope we're not going to rush it. It's supposed to have a buy stop over here, and of course, a sell stop over here. So the market can pick any of them. I'm not sure I can be able to do that very fast. It's already less than a minute. So if you have a buy stop, sell stop, now I normally do this whenever the impact is high, like today, but I like to do it across CPRs and NFP. Okay, so let's just hope today will move very well. So if it moves very well, it will pick my buy from here, or it will pick the sell from here. All right, so let's learn. So, but the type of analysis I normally do is so you can see now if there was a buy stop over there, should have triggered the buy, right? As you can see. Then of course it gives you opportunity to now carefully close this sell. So that means you're already on a buy, right? As you can see, you're already on a buy. Then any further movement upward, you can just close it, right? So you put the take profit very close. Any further movement upward, close it. That means you're already on a buy. Of course, you know you should still have a stop loss, right? All your trades should still come with stop loss. So this particular news, I actually switched to 5 minutes time, right? So if you're trading news, you should be trading with a smaller time frame. Take note. Don't say you don't like smaller time frame. Yeah, you may not like smaller time frame on normal technical analysis, right? But for fundamental analysis, you should be using 1 minute time frame or 5 minutes time frame, right? To trade news so that you can see the move very well. So right now we're on 5 minutes, we saw the gap, right? It's actually gap. But remember, this instrument has been nosediving. Okay, let's learn. So let me look at the somebody saying sometimes market precision given to us doesn't work out. That's cool. It doesn't work out 100% of the time. You shouldn't be doing that now. Even when they give you weather forecast, it doesn't work out 100% of the time, but it works out most of the time. Yeah, most of the time. So that is why you should always trade in such a way that your take profit is always bigger than your stop loss, right? Such that if you take let's say if you take 6 trade, right? 3 ends up in hitting your take profit, and of course 3 ends up hitting your stop loss, right? That's 50% win rate. But then if your take profit is always bigger than your stop loss, it means you will be in profit. It means you will be in profit. All right, so I think enough of that. Let's do some analysis here. So the analysis I normally do is called market structure analysis, right? So there's something called price action. Price action is simply price in action, right? So that's one of the best way you can trade using price action and of course market structure. Price in action. And what do we mean by price in action? Price moving from one point on the chart to another point. For example, as you can see over here, price actually moved from this point to this point. That's price action, moving from a point A to a point B, right? So that's price action. Now, market structure is actually the footprint that price normally leaves behind while moving from point A to point B. So thereby creating highs and lows, right? So if you look at the market structure now tells you the important areas on your chart that you should concentrate on. And those important areas are what we call area of interest, AOI, area of interest. Now, it is actually an area, not actually a price. Take note. Area is different from price. Price is one price, a single price, right? So we don't really work with a single price, except we are talking about a precise take profit and stop loss. But for you to enter a trade, you work with an area in an area of precision. Okay, you understand that now. So looking at the market structure, let me do H4 time frame, right? So the first thing you want to know is you want to look at the footprint of price, and that will give you an information if the buyers are actually dominating the market or the sellers are dominating the market. Very simple, right? Very simple, I can tell you that. So this H4 time frame, as you can see, you can tell even when you close the eye, you can tell that the buyers are actually dominating the market. I mean, the market keeps creating higher highs. As you can see, right? It took out this high to create a new high, right? So we created a new high, created a new high. So the highs are getting higher. I mean, so that means from what we can see here, the dollar is actually strong on this time frame, right? On the H4 time frame. Let's do the same thing on Euro USD, please. Please, if you have question, you can quickly drop it for me. So back to that stuff. As you can see, this Euro USD should already be in profit, right? For those that are scalping the news, of course, you should have taken some small profit over here. But guess what? Supposing this buy stop was much closer, it means the profit will have been much bigger, right? All right. So for Euro USD, let's look at the H4 time frame. So if you have question, please, you can just honorably drop it on the chat room, okay? So I like the numbers we have in the group here now, over 100. That's good. That's good. I really appreciate you joining, okay? Please also try and stay to the end. Those that endure to the end. So please stay to the end, okay? All right. So for what we can see right here, you can see that Euro USD is equally breaking structures to the downside, right? So if the market trade below a low, we call that a break of structure, right? So I mean, remember, we are not only giving you a signal to trade, I'm also telling you how to get it, right? Such that on your own, you can still get the signals. So this is a low, actually, as you can see, is a low. So the next time the market traded, the market, let me do this quickly. So the next time the market traded downward, you notice the most important area on your chart are the highs and the lows. Take note, very important areas, right? So, and those highs and the lows are what we call liquidity trap. So that is where the market has its liquidity, right? I mean, the highest volume of the market normally rests around that area. So we have two types of liquidity. It can be internal liquidity or external, right? That in internal, I mean, it is inside the structure, right? For example, this liquidity is actually an internal liquidity. That means this area is actually internal, right? Even before this drop, we consider it is internal. Whereas this other area is external, right? So this liquidity can either be a target liquidity or a protected liquidity, okay? A target or a protected. Like a father will always like to protect his son. That's a protected child, right? So a father will go out and target and bring more money to the protected child. Okay, you understand what I mean, right? Please, I hope you guys are following me. You're asking how exactly can we place stop loss? You're asking how to place a stop loss. Okay, now you place a stop loss at your stop loss should be at the protected liquidity, right? So that means the area on the chart the market is trying to protect. I hope I've answered that question. So that means for somewhere around here, right, your stop loss should be around this area. So for a downward trend, the protected liquidity are the highs, right? Are the highs. For a downward trend, please, you want to quickly pick up your pen and write it down very fast. For a downward trend, the protected liquidity are the highs. Write it down, write it down. You know, as the spirit is supplying. Please let me know whether you can hear me. Just type, I can hear you. Or just type that you can hear me. No, there's audio right now. Check, please. There's audio right now. Check, check. Thank you. Let's continue. So what I'm trying to do is I'm trying to establish how we trade the market only on Euro USD. Then afterwards, then we just rush to the rest. Okay. So this area is the area the market target. I took out that area, right? Okay. So this is the low. So the target liquidity at the low. So if you notice, the market targeted this low, right? I took out that low. So the protected liquidity at the heights, right? So let's zoom into this area right now. You can, okay, you cannot see my screen. I just shared my screen now. Check again whether you can see it. No chat, please. Can you see my chat? Hello, everyone. Okay, thank you. Thank you. You can see my chat right now. So let me quickly go back to what I was saying. I said the markets, I'm teaching you market structure analysis, right? What we call price action, one of the best way you can trade this market. And whenever the chart is moving, we call that the chart footprint, and that is the market structure. So the most important area on the chart are the highs and the lows. That means the chart normally move towards where we have the money. So some of the areas are protected by the market temporarily, whereas other areas are target for the market. So I mean, for a downward trend, the lows are the target. So we call that target liquidity. Somebody was asking, where should I put my stop loss? Because that's not a place to put your stop loss. So you don't put your stop loss at the target of the market. If not, the market will actually target you, right? So you put your stop loss areas where the market is actually protected. How do I know areas where the market is protected? Very simple. For a downward trend, you want to look at the highs, right? So I'm using H4 time frame to do that, right? For a downward trend, you want to look at the highs, then the lows are the targets, right? But take note, whenever these highs and lows are taken out, take note, please. Whenever these highs and lows are taken out, then it means there's a shift in the market structure. Please, I asked you to write down something, right? I don't know whether any of you wrote it down. So let me know whether you actually write that down. I asked you to write down something. So let me see those that wrote it down. Let me just type it here. I asked you to write down something. Okay, Oluwatosi. So please tell us. I asked you to write down something. Tell us very fast. Oluwatosi.
So you said when the loans are taken out, what was the next statement?
No. It's not you I'm talking about right now.
No, I'm asking you a question. I said when the loans are taken out, what is the next statement you said?
No, please. If you okay, fine. I can see there for a downward trend, protected liquidity at the highs. That is it. So the rest can write it down. Oluwatosi, thank you very much. In fact, you are the class rep for today. So please, everybody can see it, right? For downward trend, protected liquidity at the highs, right? So that means if you look at the downward trend, right? So the protected liquidity at the highs. So that means the highs are where the market is temporarily, is not permanent. There's no area on your chart that is permanent. Temporarily, the market is protecting those areas temporarily. So that is where obviously your stop losses should be, right? Then, of course, the target liquidity. Now, let me continue that statement because I have not actually finished. That's why I say you should write it down. So for a downward trend, protected liquidity at the highs, right? For a downward trend, also protected liquidity so target liquidity at the lows. So let me just copy and paste. For downward trend, now it will now be target liquidity at the lows, right? So I think I've typed that one now. So look at it now. For downward trend, target liquidity at the, so we're still talking about downward trend, right? So the opposite is true for an upward trend. I hope you guys are writing it down. Okay, just write it down, okay? It's going to save you. This can save you in trading. Now, for an upward trend, you can guess, right? It will be the opposite, right? That means for an upward trend, target liquidity at the highs. For a downward trend, for an upward trend, protected liquidity will be the lows, right? Okay, so you understand that. So let's run fast. Time is really running fast too. So I have to also run fast, okay? So that means zooming into what we have. Now, I like doing this on the H4 time frame. So there is nothing wrong with doing it on the H4 time frame. Then you drop down to your 15 minutes time frame to pick your trade. But you must have already marked out the highs and the lows, right? So for this particular place, as you can see, the market has been around this area for some time right now, as you can see. So that is called a support area, what we call a demand zone, right? So the market has not actually broken below this low. So if you look at this carefully, the market printed this low. The next time it came down, it could not take out that low. That's the first sign of that the downward trend is getting weak or is losing momentum, or we call it loss of momentum, right? There is a loss of momentum because actually coming down is supposed to take out this low, but it did not take out this low, right? So remember, from what we're looking at, this area is still the protected, it's still the protected liquidity, right? But that protected liquidity is now very vulnerable, right? The reason why it's vulnerable because we have seen a sign of weakness in the trend. I hope you guys are still following. Oh my God. Are you guys still following? We have seen a sign of weakness. What's the weakness? The weakness is this movement downward, this impulsive move downward, supposed to take out this low, but it did not, right? It did not. It's as if it's respected the low. So as you can see, I think from that news, you can see how much this thing is going upward right now. Are you guys following? Are you getting value? Or you're not getting value? Oh my God. Are you getting value? All right, so you can see that particular area of called target liquidity is actually vulnerable right now, right? So actually this market can take out this high, which is protected. Why? What's the reason? Now, it is good for you to understand this market to this point, where you can tell the rationale behind the movement, right? So you can see right now, as you can see, this movement is actually trying to tap into our protected liquidity. Why so? The reason is we saw a weakness. The weakness is that this impulsive move downward failed to take out this low. I hope we are following. So since this impulsive move downward failed to take out this low, it shows that there is a sign of weakness, right? And of course, from that particular news, we saw, wow, as you can see, I think this is that lower time frame, right? Which is supposed to be a buy stop. So you can see how much the market has gapped, moving upward, destroying everything to the upside. All right, now since you understand that very well, now I'm just going to rush through the rest of the analysis since you now understand what market structure is all about. You now understand what market structure is all about. Let me rush through the analysis now. Now, this is what so the first thing you do, you want to first do it on the H4 time frame, right? You want to map out your protected and target liquidities on the H4 time frame. Then you can drop down to 15 minutes time frame or 30 minutes time frame to pick your trade. Let me say it again. You might even want to write it down. The wisdom demands that when you're hearing something new, you write it down. So you start with the H4 time frame, right? You are actually highlight your target liquidity on the H4 time frame, right? Then afterwards, then you drop down to a lower time frame. Having that in mind, then you can now take your trade. So, but for what we are saying, take note of on this Euro USD. I just hope we not only do Euro USD before 9. But even if we do only Euro USD, the most important thing is that you're getting value and of course you're understanding it going forward. Now, once this protected liquidity is taken out properly, right? It's trying to tap into it. Once it is taken out, then we say we have a shift. So you can you can call it a shift in market structure, right? So once there's a shift, it means we have actually moved from a downward trend to an upward trend. Take note, please. So once this thing is properly taken out, not just a tap, right? So see what I mean. Let's try and make use of this 1 hour we have very well. So once this is taken out, of course, we expect a retest. And after that retest, then of course, it means there is already a shift. So that means it has changed to an upward trend, right? But for now, it is still trying to test the area, okay? Now, from what I am seeing, I can actually forecast there might actually be a shift, right? But let's just stay true to it and let's see what will happen. Now, on the 15 minutes time frame, actually, this is actually a result of the news, right? Now, if you notice, if you know your fundamental, if you know your technical analysis very well, right? Listen to this statement, very, very important. If you know how to analyze the market fundamentally, it means, technically, if you know your technical analysis, just like we just did, called market structure analysis, you will notice fundamental analysis is actually the catalyst that actually make those things to happen very fast. Let me take it again. If you know your technical analysis very well, which I call market structure and analysis, now fundamentals are actually the catalyst that actually makes things to happen very fast, right? It makes those things to happen very fast. All right. So as you can see, we have a gap. So what is gap? Gap is actually our areas of interest also, right? Gap actually our areas of interest. It means it's a sign of momentum in that direction. So in this case, it's a sign of a bullish momentum, as you can see, right? Bullish momentum. So it means from this particular analysis, as you can see, right? So we are now going up, right? So it means if we are going upward, so we are going to need a retracement back to this our area of interest so that we can buy from here, right? So if there's a retracement to this area, I'll buy. So let me give you the price range actually. So any area from so this price range is where my area of interest would be for 1.06718 to 1.06645. So this is a range inside this gap, right? Because that gap will now be turned to be a support area. So if the price retraces to this area, then you might want to do a buy with your stop loss below this low, right? Stop loss below the low. So you want to do a buy inside this area. I hope I'm communicating. Buy inside this area with a stop loss below the low. So once you know your stop loss times 2 of that distance becomes your take profit. Traders, I hope we're still here and we're following. So let me look at GPUSD very fast. Time is running fast. GPUSD. So I think we have the same kind of momentum shift on GPUSD also, right? So same thing, pretty much, even on this H1 time frame, as you can see. So this is the low. So the next time it impulses downward, it failed to take out the low, and now it has bruised the high. So taking out that high is what we call a shift in market structure. So there's already a shift equally on GPUS on the H1 time frame, right? So you can see that. So that's the first sign that the market is about to change direction, right? That's the first sign, right? So we'll be looking out for buys, right? We'll be looking out for buys. So how do we look out for buy? Drop down to 15 minutes time frame for intraday traders. Let me look at this question here. When fundamental news favor base currency, euro, what happens to your trade? Example, euro USD. Okay. So let me look at this question. When fundamental news favor base currency, euro, what happens to your trade? I think it's supposed to be a buy. But if it's news, if it's the news is positive. Oh, now please, if there's a news, and of course it's good for the base currency, of course it will be a buy. That means to go. Of course, you can see this jump, this movement upward. So Coyote, that's for you there. Now, please, for this Euro GPUSD, as you can see, we have shifted to the upside a little bit, right? So I'll be looking at for a buy condition, right? I'll be looking out for a buy, and I would like to buy inside the gap, right? So you might want to set a buy limit for the 15 minutes time frame. You might want to set a buy limit inside this gap, right? So inside that gap, I would like to do a buy. So this is the gap. I would like to do a buy, right? So that will be a buy limit, right? So with a stop loss just below, remember stop loss is there to protect your trade. With a stop loss just below this low, and of course, so the buy will be around this area. Please take note. 1 point. Let me call it for you real quick. The buy will be around this region, right? It's actually a range. So that would be actually 1.23564 to 1.23525. So if you're on 15 minutes time frame like I am right now, this low, you will see this low, right? So this low becomes your stop loss. And of course, times 2 of that distance can be your take profit, or even times more, depending on your target. So if the market drop into this area, I'd like to do a buy, right? But for those that are very aggressive, you might want to enter. But for the majority that are very conservative, wait until the price comes into this area. Wow, who is disturbing us? So you may want to wait until the price comes inside this area before you do your buy, okay? So let's look at now that's for GPUSD. Remember what we always do is we try to look at the H4 time frame, right? First to get our bias, right? Yeah, try to look at the H4 time. And it's very simple to do that, right? So remember this is GPUSD, right? We broke below this low, right? That shows that we are now going downward. Then retracement to the upside, as you can see, it did that very clearly. Retracement to the upside. Then, of course, another movement again to take out this low. Remember, this low becomes our target liquidity, right? So another movement downward to take out this low to form a new low, right? So is this qualified to be a retracement? Of course, right? The minimum two bullish candlestick on a downward trend becomes a retracement, okay? So that's just like a rule of thumb, okay? So it retraces to the upside, as you can see. Then, of course, the next target liquidity would be to take out that low. So it took out this low, right? So this actually this nature of a downward movement, as you can see, right? But those of us that understand candlestick pattern very well, right? And of course, candlestick, the build of a candlestick, you can see this is actually a pin bar, right? So this is what we call the hammer. And hammer signifies hammer is actually a bullish candlestick pattern, right? It's a bullish candlestick pattern. So this is actually a showing up here, indicating that the market is about to go up, right? So and as we can see, the market from there started moving up. But remember, this is our high, right? This is our high. This high has not been taken out, right? So what we have inside here is what we call internal structure. So what we have inside here is what we call internal structure. So this high has to be taken out, right? So if you like, this is where we started the pump downward, right? So this high has to be taken out. So so as long as this high is still being as long as the market is still protecting this high, it has not taken up this high, it means we are still downward, right? The trend is still downward on the H4 time frame, okay? So this other one is an internal structure, as you can see. All of these are internal structure. Well, what later will form our internal liquidity, right? So the market will have to still take out this liquidity. The market will have to still take out this liquidity. So most times when we do analysis like this, you might just want to take a screenshot, right, of what the analysis we are doing, then come back much later to come and check, right, if actually it plays out like that. That's how you start building confidence on the analysis, right? So this is actually our internal range liquidity, right? So that means the market might come up to take out this, right? So what about this other one up here? This is also an internal range liquidity. Why is the internal range? This other one up here is actually an internal range liquidity. Why is it internal? It's internal because this is the high, right? Or the main high, not this one. So this is the main high. So the market has actually took out this internal range liquidity. The market may equally have to take out this internal range, right? So, but until this high is taken out, so this high has to be taken out before we are now going upward. Now, this is really, this might be sounding very high for most of you, but just find a way to maybe understand it, right? So until the market trades above this high, then officially, officially we are now on the upward trend on the H4 time frame, which might even take us for some time again, okay? So now let me look at gold. So somebody have suggested gold. Let's look at gold. What is the price of the low for the stop loss? So there has been a speculation that gold may be going upward until it gets to 3,000, but we're not working with that speculation for now. So please, if you have very small equity, small capital, please, you want to stay away from trading gold. Gold this period has been very, very volatile. as small as anything below 50K, 100K, okay? All right, so you may want to add more funds to your capital, right? Call your account officer, do top up, right? Don't be trading with small funds. So do top up, right? Take your account to 200 to 500. You have the money in the bank. The money is not actually making profit in the bank. The banks rather are trading with your money. So you just learn this thing very well. Learn this thing very well. There are videos. In fact, this particular one now we are also recording it on we are streaming it on YouTube, right? And it's also being recorded. So that means after this, go back and learn it, rewind it, play it again and again, learn it very well. Then get angry, go and withdraw the money and fund your account, and then of course start trading your money. Okay, top up your account, have good funds to trade. Thank you. I can see you there on Mobola. You say the analysis is top notch. Thank you very much. Do a top up on your account, right? Now, but please understand the market first. That one's the first one. Remember, you learn before you earn. Understand the market first. Have good understanding for yourself. Know where the market is going per time. We call it the language of financial market. So what I'm teaching you, market structure, is the language of financial market. So that means the market, I'm trying to interpret what the market is doing for you. Understand it first. Then with that full understanding, then with the emotion called anger, emotion is very powerful, right? It can take you to good directions. So with that emotion called anger, withdraw your money from the bank, top up your account, the money becomes very big. You start trading it because now you now have good understanding, right? You now have good understanding. All right then. So for what you can see, I want to believe you got a lot of understanding from this, right? So it means all across the instrument we're going to open, this is just the same analysis we are going to do. So I like trading GBP, JPY. I like this instrument, right? Very powerful instrument. So you can see this instrument has shown us a shift, right? Now I wanted to go to gold, but man, I love this instrument, right? So if you're the type of a trader that likes gold, right? Yes, if you like gold because of the volatility, then of course you should like GPUSD also, right? Or let me even try and convince you and also convert you. So you should like GPUSD also because it moves like that. Then you should also like GBP JPY, right? GBP JPY. So as you can see right now, there's already a shift, right? There's already a shift. This shift is what we call change of character, or if you like, market structure shift, right? Somebody's wondering, right? Say, Emmanuel, what is this market structure shift, right? Market structure shift is when the market simply targets the protected liquidity. So that means the market has now, remember, protected liquidity are not permanent, they are temporary, right? So when the market targets the protected liquidity, we call that a shift, right? So this low right here is the target liquidity. This high is the protected liquidity, okay? Then also the market retraces upward. If you notice, why it was going up, it did not target this high. It protected this high. Rather, it stopped somewhere here prematurely and started coming down, right? It stopped somewhere here and started coming down. So that means this high has been protected. But this high is target, but it failed to target this high. It came somewhere here. Then now it has gone for that target, So that's a shift. That's taken out this high. So that's a shift. So officially we have shifted, right? On the H1 time frame, we are shifted. Now, if you notice, anytime I'm mentioning these things, I'm equally telling you of the time frame. We have shifted, right? So since we are shifted, I actually took a trade on this yesterday, and it was good. I can tell you that I took a trade, right, from down here. No, from down here to the up here before I close it. But that one is an aggressive entry. But right now, for a conservative trader, you must wait until you see a shift. The market have given us a shift, right? So after the shift, what do we do next? We start looking out for buys, right? We start looking out for structures that support an upward movement. So you may want to drop down to a much lower time frame, maybe 5 minutes, 3 minutes. So this is actually multi-time frame analysis, right? What we call top down, right? So you may want to drop down to a lower time frame, looking out for buy condition. Buy condition meaning market breaking out structure to the upside, right? So but from this same time frame, I'll just look out for a retracement for a cheaper price, right? A retracement for a discount. Then before I start doing my buy. So my stop loss can be just this low, right? So that means this low becomes our protected liquidity. My stop loss can equally be this other low, okay? So, but this one now is a bigger stop loss. So, of course, then from what we can now forecast the market to be, so the market will now target this high, target this other high, and start trading upward to the upside. Okay, so I would like to look out for a buy signal, right, on GBJPY. I will not give you that signal, but just look out for a buy signal on GBJPY. Then let's jump to gold very fast. So let's jump to which one now? Let's jump to gold very fast. Gold. Good. Where is gold now? Okay, this is gold. So on gold, on the H4 time frame, let's look at what the market is telling us, right? So gold has been on a very strong upward trend, as you can see, right? Very strong one, man. I can tell you that, right? Very strong one. So on an upward trend, the most important areas I want to see the markets respecting the lows, because the lows are the areas of discount, right? The area of interest where new trade or new buys comes in, right? The lows. So the lows are areas of interest where new buys comes in. So you guys are still on, you're still following me, that's good. So this is the market giving us higher lows. But let me just paint out the most recent one for you, okay? So this was the low, right? That took out this high to form a new high. And of course, the market retraced again, right? If you notice, this retracement failed to trade below this low, right? It retraced again. Then, of course, this low was protected, as you can see, because don't tell me this long movement downward would have as well take out this low. But guess what? It did not. Remember Newton's law, every object will continue in a state of rest or of uniform motion, right? Except an external force is applied. So that means this force, this momentum downward should have continued except an external force is applied. And guess what? External force was applied such that this low was protected. So an external force was applied to stop it so that it did not go below this low. That's to show that this low was protected. Okay, you understand that, right? So the market impulses again, right? Then, of course, let's use this other one, right? Now, it retraces again. Now, even though it has not traded above this high, if you notice, the high was still getting higher. So even though it does not trade above this high, the lows were still getting higher, right? So in an upward trend, the highs and lows are very important. But if you ask me, the most important among the two is the low in an upward trend, right? Now, let me take it again. In an upward trend, the highs and the lows are very important. But among the two, the most important is the low. You understand it very well. You know, in most families, anyway, let's not go there. So this is the low. The next time you took out this high, form a new high. Now you notice this high should be an internal range liquidity, right? So this one is the external one. So you took out this high. So the market normally does all of this so that it can have liquidity to trap, right? Or to target. Now, of course, if you notice, the market traded downward. It took out this low. That's taking out this low. That's taking out this low. What do we call that? Who can guess? The market has taken out this low. That's taking out this low. That's taking out this low. What do we call that? We call that a shift, right? So we call that a shift. So, AY, you're saying, can you give us entry points? What I'm doing is far more important than entry points, okay? I'm telling you that the market have shifted. So if the market have shifted, it means the market may now start trading to the downside, right? The market may now start trading to the downside. So one thing you might do is, if you have a buy trade and the market have shifted against you, right? Because placing a trade is very important. Managing a trade is also very important, right? So what most persons do is they just want to enter a trade right? They say, give us entry, give us entry. They just want to enter a trade. What about managing a trade? What about if you have a trade? What should I do? Should I keep on holding the trade if the trade is in profit? Or should I close the trade? You know, all of that stuff, very important. So before you can know how to manage a trade very well, you should understand what the market is telling you. You should understand whether the market is telling you that, hey, I've switched to a different direction. If you hold your trade, you might just be in for a very long negative, right? Now, it means if you're having a buy trade and the market has shifted, okay, you should close your trade. Take note, if you're having a buy trade and the market have shifted against you, it means you should close your trade, or you may just want to wait until the negative reduce a little bit, because there is bound to be a retracement, right? You may just wait until the negative reduce a little bit before then you should close the trade. It means the market have shifted to a new direction. So these are the things we normal that you should know, right? Now, for example, since this market have shifted to the downside, for that the market structure shift, you may now need Fibonacci to drop from the high to the low, right? Now, this market will need to actually retrace a little bit. Now, the market can do 23.6% retracement, right? So if the market does 23.6% retracement, that shows that the momentum was actually very strong. Man, take note. If the market does only 23.6% before taking out this low, it means the momentum driving it was actually very strong, right? Now, but if the market does only, if the market does 38.2, right, that's a fair amount of retracement. So that is why I said if you have a buy trade and the market have shifted against you, right? Now, for those of us that are doing swing trading, now you may want to close it, or you may just want to wait until the negative reduce a little bit, right? Because closing minus 4,000 is far better than closing minus 10K, okay? So in trading. Now, 50% retracement, anything above 50%, which is not bad, right? So 61.8%, market might actually retrace to that level before another impulse, making this the target liquidity now, okay? Now, you understand that very well. So that means the market has actually shifted. So if we are looking at for a trade right now on gold, it means you may want to take a buy. Remember I said, you may want to take what we call a short buy, right? Because of the retracement. But take note, while taking that buy, your stop loss should be below this low, right? While taking that buy, your stop loss should be below this low. The reason is this low, the market has already shifted, right? So it becomes a high risk trade because you're not trading against the trend, right? But then we are trying to trade the retracement, right? We are trying to trade the retracement. So this movement upward is a retracement, right? Is a retracement. So which I said it can actually move up to 23.6%, or it can do 38.2%, right? Before moving to the downside. So that is you trading against the trend. Otherwise, what you need to do is to trade with the trend. It means you have to wait, right? You have to wait. I normally tell them waiting is trading. Okay, so you have to wait. What are you waiting for? You have to wait until the market trade into this 23.6%, right? Then on a much lower time frame, you can now look at for break of structure to the downside, then before you can now start selling. Or you wait until that happens in 38.2%, just like that. So if I'm to give you a signal right now, it would be a signal, right, to trade the retracement upward, which is a high risk trade. I hope you're understanding it. Now, in trading, we have high risk trading and, of course, low risk trading. So depending on where your capital is coming from, so you can either be doing low risk trading or high risk trading. So let me drop down to 15 minutes time frame. 15 minutes time frame, right? So on 15 minutes time frame, listen, on 15 minutes time frame, for me to now take that retracement, remember I must see break of structure to the upside, right? That means I must see at least momentum that is trying to shift to the upside. There's a lot of question here. Please, I'll take the question. Excuse me. So you have to wait until you see a shift. Now, let me ask, have you seen a shift right now? Let me ask you, have you seen a shift? Now, remember, the chart is the king, right? you should always follow the chart. Have you seen a shift? Have you seen a shift? Let me know whether you actually following me. 15 minutes time frame. Everybody, please look at 15 minutes time frame. Is this a shift? Has the market shifted to the upside? No, not yet. No, 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 no. You that you're saying no. Okay, there's a lot that's been going on here. What are people saying? Okay, please, we can't see the price axis on the screen. It's difficult for us to determine the price of the low and the high. So you cannot see all of these prices. Okay. Okay, you understand change of character, right? It's the same as break of structure. Change of character is break of structure now, targeting the protected liquidity. Okay, thank you very much. I can see all of that. No wonder. Okay, so thank you very much, guys. I saw all the time. Thank you very much. So now this is shifted. I don't know whether you can tell whether it has shifted, right? Now, how do you know whether it has shifted? Simply put, let's see here. This is the impulse to the downside, right? And of course, this is retracement to the upside, right? This is retracement to the upside, right? Now, the next impulse to the downside failed to go. The next impulse to the downside failed to go lower than this, which is good, right? So that is why we wanted to trade the retracement to the upside, which is good. So this, for the fact that the market trade to this level and did not trade lower than this, right? It's supporting our intending buy trade, okay? That means trading the retracement to the upside, right? So then the next impulse to the upside, if you notice now, let me do this quickly for you. It's already 9, guys. We're trying to round up right now. Okay. Now, but if you watch, this high now actually tapped this high, as you can see. This new high tapped this high, right? Right? Now, but there's a challenge there. Now, it actually tapped the high, but it did not close above it. So there's actually two difference between tapping the high and closing above it, right? So tapping the high could just mean this, tapping the high could just mean it's targeting the internal range liquidity, right? Now, but if it has closed above this high, right, that means it is not actually just tapping it, it actually want to trade above it. I don't know whether you're following me. Now, it actually tapped the high, it did not close above it. I hope you understand what I mean, close above it. We have the opening price and the closing price, right? So it actually traded above it, but it did not close above it. So those two things are two different things, right? So that means our attention will now be shifted to this other high. Take note. Our attention will now be shifted. Please, you can actually watch it in again on YouTube, okay? So let's say you're not really following. You can get back to YouTube and watch again. Now it tapped the high. Now our attention will be shifted to this new high, right? Then it now traded below this low. Come on now. It traded below this low, right? And took out this. Remember, all of these are internal liquidity, and the market normally likes those internal liquidity, right? So it's like a food for the market, right? It's where the market wine and dine. So that I can have enough power to move, right? So it took out this internal range liquidity. So for us to take that trade going upward, remember we dropped down to 15 minutes time frame. For us to take that trade downward, it means this high must be taken out, right? So that means the market should trade, take note of the market should trade above this high, something like this. Then any further retracement downward come on out. That's what we're going to take our trade. Now, if you're taking that trade, remember you are only taking the trade, you're only trading the retracement to either you're only taking the retracement to either 23.6% retracement level or the Fibonacci from the original impulse to the downside, or you're trading it to 38.2% retracement level. So for now, you're not taking any trade on gold, right? You're waiting to see whether it will trade above this high, then give you a retracement for a cheaper price, or if you like a discounted price for you to buy, right? But guess what? We have shifted to the downside. So guys, it's already 9. Let me look at your questions. So the last one here is, you mean closing above with body? Yes, that's what I mean. That's what I mean. The body should close above. So he said, please, I would like to have a recorded version of this market review because it has so much value and I would like to review it later. Okay, that's good. Thank you very much, Mr. Frank. I can see you there and you're actually very frank. So you just go straight to our YouTube channel, right? Go straight to our YouTube channel on Rally. Just type Rally Trade. So overall, it's a sell. Yes. It's still a sell because we are broken structure to the downside, right? But you don't sell immediately. You sell until now. Let me see. Let's go back to H4 time. Now, the market has already done a lot of sales, right? So it means there will be need for replacement. And so that's why we don't want to sell. If you sell right now, it means you are selling at a low price. Come on now, who likes to sell at a low price? We like to sell at a premium price. Remember, premium or nothing. You would like to sell at a premium price. That means we are waiting for the market to give us opportunity for a premium price. That opportunity for a premium price means it should retrace to the upside, right? That retracement to the upside is what I just analyzed for you now, right? So if you want to sell, you don't just sell immediately. You wait for a retracement, if you'll be selling at a low price. So I was actually saying something here. Okay, please get to Rally Trade YouTube channel. There you will see this. So we are streaming it live there, and it's also being recorded. Okay. Somebody was asking why did that news come out positive, right? So if you look at the news, it was actually news, right? The service industry had the positive one, then the manufacturing industry had the negative one. So if we have a mixed news like that, then of course sentiment will drive the market. Okay. And the sentiment that drove the market drove the market upward, right? So if you have a mixed news, right, one good, one bad, sentiment will take the front seat. Okay, please, I think I've answered all of the questions. Okay, we cannot do US30 again. It's already 9, guys. Thank you very much. This is Emmanuel Udogu reaching you from the beautiful city of Port Harcourt. Please, let me drop my number 09026264507, 09026264507. Okay, please join us tomorrow again for another exciting. Okay, you're asking for our YouTube channel. Just type Rally Trade. Just type Rally Trade on YouTube. Then you see it. Thank you very much. Please, I really thank you. Thank you very much. So that's my number there. So guys, join us tomorrow. 8 a.m. is the time for another exciting analysis again. Bye for now.